10 things you didn't know about LLC. When you first sit down to create an LLC, it can be challenging to know precisely how the process works, what's involved, and what's required. You might have heard about different types of organizations before, but many things could surprise you about this business entity. If you're thinking about starting your own business through a limited liability company, then I'm here to help. Not sure what LLCs or limited liability companies are? You probably do now. Here are 10 things about LLCs that you probably weren't aware of that can assist you in determining if you need one. Number 1. Sharing revenues is straightforward. With an LLC, you can choose how to share the money you make. It's not essential to give everyone an equivalent portion of the profits. In reality, if one individual puts in 60% of the money while the other puts in 40%, the revenues will be split in a similar way. And yet, you can also select a different way to share profits based on the requirements of your company. Number 2. The shareholders of an LLC can decide how to share the tax load. Your MultiMember LLC can select how it will be taxed and how the taxes will be shared among its members. So you and the other shareholders can talk about the amount each individual should be responsible for. In this manner, everybody is happy and on the exact same page. Undoubtedly, the most popular pattern is for each of the LLC shareholders to pay the same amount of taxes on the net earnings, unless some shareholders are more involved in the company's operations than others, or if particular owners put more money into the company. You can divide up each person's share in any way you want. Number 3. Establishing in some other state will not assist in avoiding taxes. We all remember hearing that states without business income taxes like Delaware, Nevada, and Wyoming are called tax havens. Many business owners want to save money on taxes, so they form their limited liability companies in such states instead of their own. But it doesn't happen so often. Let us imagine that you live in Nebraska and intend to run your company there, and you're thinking about establishing your LLC in Nevada so you can take full advantage of its tax advantages. This may not support you very much since you'll be required to pay taxes on your commercial transactions in Nebraska. Even so, you'll finish up with much more accountabilities and startup and maintenance expenses for your LLC, with minimal advantages to prove, particularly since you'll have to register your company as a foreign LLC in your native state. Number 4. Non-US citizens will need a TIN. You'll need one tax ID number when you're moving to the US from some other country and wish to start an LLC. You can pay the taxes on your company with a TIN instead of an SSA number. Complete the Form W-7 and send it to the Internal Revenue Service to get a TIN. The nice thing about this form is that it can be used for more than one thing. It can also be used to demonstrate your identity and your status as a foreigner. Number 5. Single-member LLCs are taxed the same way as sole proprietorships. For tax purposes, a single-member LLC is compared to a sole proprietor in the sight of the Internal Revenue Service. All the entrepreneurs must fill out a form named Schedule C to argue the net income from their LLC, then move those details to Form 1040 when they fill out their own tax return. Though the single-member LLC is taxed like a sole proprietorship, but it nevertheless gives its owners limited liability protection, which is one of the most fantastic perks of an LLC. Number 6. LLCs are simple to set up and maintain. LLCs are cheap and straightforward to set up. You can start an LLC in any of the 50 states by submitting articles of organization to the Secretary of State. The accurate charges and paperwork process could differ from one state to another. An LLC could have as many owners as it wants. There are no limits on how many owners it can have. You can establish a single-member LLC by yourself, or you can establish a multi-member LLC with some other folks. You have to give your LLC a name that isn't already being used by another LLC located in the same state. You should also make an LLC operating agreement that explains how your company will take decisions about money and how it will run. It's not like all states require it, but it's a good idea to keep things open and prevent unnecessary disagreements. In comparison to corporations, LLCs have fewer rules to follow. When you set up a limited liability company, you have to cope with very few documentation and reporting requirements with the Secretary of State each year and over time. Number 7. By making an LLC, your personal assets will be safe. LLCs safeguard your personal assets. How will this actually impact you? As an LLC participant, you aren't accountable for the company's debts. Your mansion, vehicle, bank balances, and other assets are secure from the business's liabilities. Creditors and financiers can't go after your personal property. Limited liability usually signifies that a company owner is also responsible for what he or she has put into the company and not for personal assets. But limited liability doesn't mean no liability. If a company owner breaks laws, wastes money, or does something illegal, they can be held responsible. Number 8. It can be challenging to locate investors for your LLC. An LLC isn't the best method for a company to open or encourage investment. You must form a corporation if you desire to receive money from investors outside of your business. Why? Since corporation lets you give out the company shares and keeps investors from being liable. Number 9. MultiMember LLCs are taxed like partnerships. And how about LLCs with more than one member? They're taxed like general partnerships by default. Just like single-member LLC, the net earnings go through the corporate entity to every owner. Then, they are obligated to pay their portion of the taxes to the Internal Revenue Service. So rather than submitting a business tax return, an LLC with more than one member would only send the Internal Revenue Service a Form 1065, which includes details about the company's total taxable income and lets the Internal Revenue Service know the amount each individual should pay. Number 10. LLCs have a tax system called PassThrough. Most of the time, LLCs don't have to pay taxes at the corporate level. The revenue and losses of the LLC are shared by its partners, who would then disclose them on their personal tax returns. In contrast, you will be taxed twice if you form a corporate entity. This is one of the biggest problems with this business structure. So now you understand what formulating an LLC means for your company, you'll probably make the right choice. Want to find out even more about LLCs? Check out our other videos to learn more about an LLC, its pros and cons, and the steps to make one. Thanks for sticking around till the end of the video. If you enjoyed the video, smash the like button and subscribe to our channel for more amazing videos just like this.